Hello, my name is Mike Happel. I am the head of Munich Re's Special Case Unit, where we underwrite mature ages and large face amount cases. Today, we are talking about business valuation. Specifically, we're going to look at the income approach to business valuation. The key to this method is arriving at an income figure to use in the calculation to determine a reasonable value for the business. Regardless of what multiple is being used, there are adjustments that can be made to net income that will provide for more favorable valuations. A review of the income statement will give us the information we need to make the appropriate additions and subtraction from the net income per statement en route to a final adjusted income. Some statements are prepared in a fashion that provides a figure for Evita. The word Evita means earnings before interest, taxes, depreciation, and amortization. Evita is an income measure before non-cash expenses, taxes, and interest expense are taken into account. If provided, that number can be used as the income figure for the valuation calculation. If Evita is not part of the statement, a little more investigation is needed. A review of the expenses in the income statement can provide what we need to calculate Evita. In the sample statement under Operating Expenses, we can scan those items deducted and pick out the numbers needed to adjust the income figure at the very bottom of the statement. The first item would be the depreciation taken of roughly $1.6 million. Depreciation is an accounting cost recovery mechanism for prior capital purchases. Capital purchases are not expensed entirely in the year of the purchase, but are depreciated over the useful life of the asset. The deduction for depreciation expense does not represent cash used during the statement period and can be added back. We also see donations. This is a discretionary item that can be added back as well. While small in the overall context here, sometimes this can have a more significant impact on the bottom line. Next, we move on to other income and expenses and see interest expense. The use of leverage or debt in business is also considered somewhat discretionary and something that can be a reflection of management style. Also in this section, we see other income, which we can deduct from the net income because this would be money earned that is outside the usual operating activities of the company. Lastly, we can add back taxes, which are listed as the final deduction before the net income is listed. Thank you for your time today. We would love to hear from you. Please send questions or feedback to us at the email box on the screen.